So, recording has started, and here we go. Now, first of all, apologies for the Zoom link problems. That's gone. Other people are going to be joining later on, but let's get cracking ahead. And you could have been anywhere today. It's a Friday. Hopefully, where you are, it's not raining for a change, and you could be now taking the dog for a walk, doing some work, etc. But you chose to log in and work on yourself. And as they say, once you lose all your money, you can always earn it back. But once you spend your time, it's gone forever. You decided to spend your time on yourself, and for your business. So massive round of applause and well done to you. Um, Top 7.5 tips to raise finance for your business. 7.5, what on earth does that mean? More on that later on. But to get the best out today, I hope you'll agree with me on 6 things. Get the best out today. I hope you'll agree with me on 6 things. First of all, I'm pretty sure you've heard of the statistic. And when it comes to webinars and workshops and seminars, 80% of the people forget what they have learned and probably don't take any action. That's normal. There's also another statistic that says that our knowledge retention can be as high as 80% if we choose to get interactive, asking questions, answering questions, taking part in exercises I'll be throwing out there. So strongly recommend for you to get interactive because the knowledge retention can drop to just 7% if we just choose to listen. And that won't be the best use of your time. Strongly recommend get interactive so you keep it all in your mind for as long as is needed. Secondly, great time to network, great opportunity to network rather. Got a handful of other business owners or aspiring business owners in the Zoom room right now. And who knows, your next collaborating partner or your next customer could be around the room. So feel free to share your contact details, your Zoom link, your website links, your email addresses, your LinkedIn URLs into the chat box. So you can all connect with one another. Great opportunities come through people. Thirdly, strongly recommend be visible. Only a handful of us. It doesn't matter if you're working from home, you've got the fridge in the background, you've got cats running around, it's absolutely fine. Do make yourself comfortable, be visible. We all love to put a name behind a face or a face in front of a name. So that's absolutely, that'll be wonderful as well. Raises the energy in the Zoom room. Number four, if you do have background noises, keep yourself on mute. That would be absolutely much appreciated. If you don't have any noise in the background, you can unmute yourself. Number five, take what's relevant to you. Today you're going to be bombarded yet again with lots of information. Plenty of information being shared today, but take what's relevant to you. That way you're not feeling overwhelmed. And finally, questions into the chat box. If there's anything you don't understand or want answered, please feel free to whack into the chat box, and I'll keep a lookout on it to get the questions answered. Now, sometimes the questions could be answered on the spot. Sometimes the questions could be kind of deferred to a bit later on in the presentation in case it's going to be covered later on. Or we may encourage you to just, simply book a one-to-one with Mike and myself if you want these questions answered on a one-for-one basis, and that we could do that for you. But always happy to do what we can for you over the next hour or so. As I mentioned, the interactive part. Let's get tiny bit interactive. Just type into the chat box. What part of the country, what part of London you logging in from? Let's get a flavor of where our audience has logged in from today. Oh, Acton Town, not too far from where I am. Amazing. West Yorkshire, lovely. Nice part of the country over there. Excellent stuff. We've also got one from Pinner, Deptford.
Yeah, yeah.
We've also got one from Northwood as well. Love it. So I think we've covered Northwest, Northeast. I think that's Pinner, so that's north-ish. Anyone from south of the border? No, we got West Yorkshire, so outside London as well. Great, great coverage over there. Next. How about type into the chat box? What kind of a business or career are you in right now? Or what's your profession? Let's get a flavor of the businesses, careers, and professions people have right now. What kind of business are you aspiring to open up? Let's type that into the chat box. What do we have here today? Digital journaling application to help people manage emotions. Interesting. Answer biologist. Wow. You must have a few initials after your name. Professional podcast. Look at that. I can get some lessons from you. And you've got a commercial finance broker. Of course, that is Mike. Interesting stuff. Careers I've probably not heard of. Plenty of things we can learn here today then. Good. Now that we've got our fingertips and our minds warmed up, let's get straight into it. So just I'll run a quick disclaimer by. And disclaimer is that there are many ways to skin a cat. And what we will be sharing with you today works and has worked for thousands of businesses up and down the country. But take what's relevant to you. Some of it will be, some of it won't be. That's absolutely fine. But before we get started, I need some permission. Myself and Mike need some permission from you for the next hour or so. And that is it okay for us to be your finance coaches for the next hour or so? Type into the chat box whether you give us permission to be your finance coach for the next hour or so. It will be a massive disaster if we don't. But the reason why we'd love to have that permission is because our role as your finance coaches for the next hour or so is so that we don't just sit here talking at you, but so that we can sit here and ask you some thought-provoking questions. So we can sit here and give you some exercises to do to help you take away the right action points for yourself and help you take away the right directions for yourself. So that's what we do as helpers. Our role is to make it relevant to you by asking you the right questions and also giving you the right kind of tools and tips you need to take your business to the next level. Because when it comes to business and growth, etc., the challenge most people have is not necessarily knowing what to do, but doing what you know. And by you taking away action points and committing to them, you actually start to do what you know and put some real tangible motion into place. Now, the agenda, very simple. How to grow and finance your business during economic, maybe political turbulence. That's the key things we're going to be going through today. But remember, your business is unique, and so are your financing needs. So today we're not going to go through 7.5 techniques. We're going to go through 10, probably 10.5 techniques of how you can finance your business. And whilst we're going to be covering it quite generically on the session, we've been sponsored to give you a gifted session for about 30 minutes on a one-to-one basis if you want to speak to your unique financing needs for the business as well. So feel free to contact Mike and myself. Our LinkedIn URLs will be out there for you to use to contact us and maybe get session booked to have or your one-to-one kind of questions answered with us as well. So do bear that in mind. But without any further ado, let's get started. But before we get started, I'd like to quickly introduce Mike. So Mike is a commercial finance broker. He's one of the senior directors of the National Association of Commercial Finance Funding, Commercial Finance Brokers, yeah, NAFCB, and has been in the industry for over 30 years. He knows stuff that people don't even know themselves and always learning. So with that, over to Mike, and let's get straight into it with the first financing option. But in fact, before we do that, let's set a bit of a backdrop. Mike, I've got a question for you. Sorry for putting you on the spot. I love doing that. The question is, how would you summarize in 60 seconds your view on the current lending, borrowing, and investment market? What's your view on the current lending, borrowing, investment market?
You want a 60-second answer. Okay, it's tricky. It's especially challenging for newer businesses and especially for newer entrepreneurs that are not homeowners. I'll explain more later on, but it's tough out there. And you need people like me to navigate you effectively. I'm a bridge between lenders and borrowers because I understand how lenders work. So I used to be a major underwriter for many banks and lenders, and I used to run finance companies. So I know their language, and I know a language that an ordinary business understands. And at the end of this session, there'll be a link to my LinkedIn page. I do a lot of education to try and teach people about what they should and shouldn't do. So I have a company page with my logo on the back, and I also have my own personal page. So I would strongly suggest when we finish, find me, look at the stuff I've done, see if things resonate with you.
Cool. Sounds good. So we've got 10 key financing options we're going to share. First up, asset financing. What does that mean?
Yeah, very simply, this is more for established businesses, but it can also apply to a younger business too. If you're looking to buy IT or you're looking to buy equipment that you need for your business, whether it's soft assets, like I say, like IT or office furniture or stuff for your smaller business, if it's service business, I can arrange leasing hire purchase, and I can do that over a period of time. Everything, of course, is the magic phrase subject to status. It has to be based on your ability to service the debt that you incur to buy the assets that you need. It's a very simple.
Okay, so can you give us examples of what kind of assets businesses normally want to finance, like especially
Gosh,
startups and
yeah, with startups, often they probably need um, office furniture. That's one thing they need. They need computer equipment. They'll need printers. Some will need associated soft assets for if they're office based. If you're in hospitality or if you're in a trading business where you need machinery, you'll need that. All of those items can be leased, and the asset forms a security for the lender. But then they're also looking at your ability to repay. It's one thing to borrow the money. The second is the ability to repay it. And this is a maxim that goes across all lending classes. It's easy to borrow, it's harder to repay. So they will assess your ability to do.
oh, and on that front, your ability to repay. What things do the listeners on this webinar need to be aware of when they go to prove their ability to repay?
Okay, so I noticed that two of the people here are thinking of starting up a company as a startup, and I'll address that separately later on. So, yeah, I've just seen Jasmine's comment about you did asset financing for a £10,000 chocolate grater. It was very useful. Well, thank you, Jasmine, because it really is very useful. If it's core to your business, then it's a business critical asset. And if you need to spread the cost so that you can earn enough money to make a profit and repay the cost of the item that you finance, then that is a useful and correct lend. But lenders will look at your business credit history. If you're a new start business, I'll talk about that separately later. There are ways you can get money outside the lending community, which may help you to start up your business. But if you're an existing lender, whether you're a sole trader, partnership, or a limited company, they will assess your ability to repay. That's what they will do. So they will look at your personal credit history as well as your business credit history. People do this now.
The credit history is so important. Does that mean looking at whether you have CCJs or all that kind of stuff assigned to your name?
Oh, yeah. And if you have any sort of formal action against you, it really counts heavily against you, and it stays on your credit history, both personally and corporately, for several years. So, a mistake is costly because it impairs your ability to borrow money from, at the best rates that your credit risk allows, from a variety of sources. The CCJ, by the way, Isla, is what's called a county court judgment. So basically, you've not paid a debt that you owe somebody, or you've not paid a bill that you owe somebody. They take you to a small claims court, a magistrate's court, and they lodge a claim against you for unpaid bills. So basically, you're in breach of contract. Okay, I hope that helped.
Makes absolute sense. Yeah, good question there, Isla. Please do ask along the way. That's what makes it useful for you.
Yeah, so that's it. That's it, finance. It does what it says on the tin. Very simple. Okay.
Next one, invoice financing. What's all this about?
Yeah, invoice financing is essentially more established businesses, especially where you're doing it on a B2B, a business-to-business basis. It doesn't so much work in consumer. I'll come on to that with one of the other options later. So essentially, this is established businesses that use invoices where they've incurred costs from their suppliers to provide goods and services, but their customers are late in paying. And I don't mean late. You can get invoice finance in a variety of different guises for up to 90 days after the invoice is issued. You may have 30 or 60 or 90-day payment terms. You can find financiers that will actually provide you with the money up front. It won't be all of it. It'll be probably up to 80 or 85% of the value of the invoice, because they then keep the rest back as their security and an interest charge. So everything that's borrowed has a cost. So very simply for you, if you make a product or provide a service and it's, as you say, £10,000, you've got to make sure you have around 30% gross profit. So
Could you
that
give me
you
a rough example? So if I was a builder, let's say I got a mini, if I'm a builder building extensions and conservatories, etc. An example of how invoice financing would help me.
well, yeah, in construction, it's slightly different because with
Okay, let's
construction,
not go into a complicated. Let's do a
yeah,
nice easy
it's
one.
messy. Yeah, it's more messy.
A
But
nice easy one. A nice easy. Let's say I'm a um
if you're a supplier of products, let's say you're a supplier of, I don't know, kitchens
I
or,
supply these black mugs.
yeah, yeah. Okay. So if you're a supplier of a physical good or an item that has literally, once it's sold, it's sold, then as long as it's to a business, then essentially you'll be able to raise, as I say, up to about 80 to 85% of the value of that invoice upfront from an invoice finance company. They will then charge you a fee for having a facility, because it could be a revolving facility that runs over a 6 to 12 month period, and they charge you interest for the money that's out. And sometimes they also charge you disbursements, i.e., chasing the money up if it's what's called a confidential invoice discounting facility, which is where the client manages its own sales ledger, but they get the money from the finance company, and the invoice finance company then checks the ledgers and the bank statements every month to make sure that everything it does. So there's a lot of now remote-based banking and access to systems, accounting and banking systems.
Gotcha.
So
So it seems as if invoice financing is for business owners who are going to get paid later than when they've got to provide or pay the suppliers. So
well,
if I've
they've
got to
done
pay
the
my
service, supplied
suppliers,
the good. Yeah, so they have to pay the suppliers up front. So if you're making something, you're buying in materials or you're buying in
yeah,
product to make your finished product that you're selling, then you've got to pay those suppliers. And if you don't have the money because your sales are slow, they're not being
yeah,
paid enough, that's where invoice financing comes in.
gotcha. So that's it. One key takeaway for the listeners of here today, that if you are having to pay your suppliers sooner than how quickly you're getting the money from your customers because they take 30 days to pay, 60 days to pay, this is something that's going to be important to us. Then the next question is on this, Mike. Why not
Yeah.
just use my profits to pay to
Now that you touched on a very interesting point, and that's something you'll see on my LinkedIn post. Most businesses live on fumes. By that, they don't have enough money to pay the bills month to month. It's always wise that if you borrow money, make sure you've got at least 3 to 6 months' money in the bank that covers all your costs, including your
mm,
savings. It's really important. You've got to have some fat on your back. Many businesses don't do that, and they get into
mm,
trouble. And they sometimes over borrow, which then causes more trouble. Okay, so
gotcha.
so that's something I would always suggest, is make sure you have 3 to 6 months of free cash in your business at all times.
Makes sense. And I think that message was rubbed in um by the government, etc., to kind of always be prepared for 3 months of cash for ourselves for the
Correct.
future. Cool. Over to method number three, working capital financing for day-to-day cash flow.
Well, it's very interesting because there are quite a few entrants into this market. In fact, this morning I've just helped somebody that Amit and I both mutually know to raise some short-term money, and by that, that could be for a period of between 3 and 24 months.
What
Effectively,
is
it's
working capital for novices or
working
anything?
capital financing. So essentially, if you, let's say you have this particular client, I'll use it because it's a live example. Um, they want some money to do some spot marketing, and they don't have enough cash coming into their business. It's effectively what I would call, it's not a luxury spend, but it's a need to have spend. Okay, but they don't quite have enough traction in their business. Now, there are lenders out there that will provide that. Um, if you're a more mature business, you can have it's like a revolving overdraft. If a bank can
Hmm.
give you an overdraft, but your business is actually quite solid, you can borrow money on a short-term basis and effectively use your trading to be able to service it. But occasionally there are specialists that will also give you a little cash boost where you've got a specific thing in mind. So this particular client needs it for marketing. So there are lenders out there. It isn't cheap money, by the way. It's, if you think about your personal lending, you get a personal loan. I'll come on to that maybe a bit later on because there are some schemes available for startups, which I'll talk about. But borrowing money short term is not cheap.
Mm.
If you borrow personally, and this is the craziness of the way in which the lending market works, if you have a job as a salaried employee, you'll find it easier to borrow money personally, okay, than if you're actually a business owner. That sounds really odd. So if you work for somebody, you can get money, personal loans and mortgages cheaper than a business themselves can borrow money. So it's actually more expensive being in business to borrow money than it actually is personally. Yet you need a job. Yet you need a job in a business to be able to get the cheap money for yourself personally, which seems completely counterintuitive. But that's how the market works currently, which is very odd. But yes, so working capital is short-term money where you need it for a specific requirement. It's not something I would always recommend, but some people do need it where they've got a marketing campaign or they've got a cash boost or an urgent client that they need to service and buy some goods to actually complete their services or supply.
So to pay for the
day-to-day.
production
Sometimes
of your
it's
goods,
to pay for the day-to-day.
production of your goods and service. For example, if you've got to hire a locum all of a sudden and you've got the money to do it, go and get some working capital finance to pay for them. If you're in, if you've got like a market stall and you want to buy like, I don't know, mangoes because it's mango selling season, I think crikey, I need like 10 grand to buy loads of mangoes. You go and do some working capital finance. Makes sense. Awesome.
The
overall,
key is
you don't recommend it because the interest rates are quite high.
The interest rates are higher. It doesn't mean to say that it's not bad, but you've got to work out the benefit for you. So basically, if you need that money, are you going to make the cost of that money plus a profit? That's what you've got to do. You've got to work out. So it all comes down to the value for money it brings you.
Value for money. Love this. Key takeaway there. Always figure out what you're paying out versus what you're getting in when it comes to finance. Number 4, commercial loans.
Yeah, they do what they say on the tin. That's for a more established business, and that can be for a partnership or a sole trader as much as it could be for a limited company. So they tend to be structured deals based on a long ability to trade. You can demonstrate you've been in business a few years. It's for a more mature borrowing entity, and it's priced accordingly. So the risk reward is based on the fact that the business is trading solvently. There are no major issues. There are no major issues with the directors or the partners of the business. So that's why your personal credit score as well as your business credit scores are really important. If you miss a single payment anywhere, your credit score is impaired, and that sits on your records for at least 2 to 3 years, which means your ability to borrow money at best rates in the future is immediately hit. And sometimes it stops some lenders from lending. So my takeaway for you, if you're starting up a business, is make sure you pay every bill on time every month, because it really does hurt you. And the analytics now that lots of the lenders use, some of them use online methods. They use real-time access to read-only bank accounts, read-only accounting software. They check everything, and they look at your credit scores, your personal ability to pay. Anything that you miss really hurts you.
Makes sense.
Okay, so it's a very simple thing. Okay, commercial
5.
Mortgages. Yeah. I'm not a residential mortgage broker, and I'm not a buy-to-let broker for individuals that basically have a second property or a small portfolio to rent. I don't do that. But for commercial mortgages, which can include a commercial buy-to-let mortgage portfolio, it does what it says in the tin. Basically, it's a mortgage on a building which is a freehold or a long leasehold. So if you're manufacturing or you're a wholesaler with sort of storage facilities like a warehouse, then I can provide mortgages. The loans to value tend to be up to 70% in the current market. The rates are higher considerably than borrowing personally. So you're borrowing on a loan to value basis, priced like you would a residential mortgage over 25 years. But they give you effectively a fixed interest rate or a variable, which it covers the 25 years, which is X% over a base rate usually. But if it's fixed rate, it's based on the current base rate and a margin that's effectively then covered by the lenders who hedge the money. They basically borrow fixed to cover the fixed loan, so they guarantee their profit. But typically, it's about 3 to 4%, and that's for more mature businesses that have assets. Okay, so I suspect people on here aren't in that position, but it's good to explain that that's what it is. But it's all about the ability to pay.
All about the ability to pay. Makes sense. Number 6, growth finance.
Yeah, there are some niche players in the market. It's sort of linked to working capital finance, but the growth finance has a more widespread application. So, for example, if you're expanding rapidly, especially in the sort of digital space, that's quite
Mhm.
interesting because what you find is that people suddenly need an injection of cash to fulfill a project. So, for example, whatever line of business you are, but if it's mainly service related, if you suddenly got a large contract that you know you can fulfill and make a decent profit on, but you can't actually deliver it, then
Mm.
that's where you need the growth finance. And there are specialists that provide that sort of funding. They will, again, look backwards at what you've done to date, and they normally look at it for 6 to 12 months previous trading. They look at everything. Sometimes that can also apply to buying businesses, so you could be acquiring businesses. And I
Okay.
appreciate, again, it's for the more established businesses where there's an opportunity to buy a rival or an opportunity to buy some work from another group that's hiding it out, and you can then replace them. So
Mm.
there are many applications for growth finance. It's there, but it has to be sustainable. Everything that you borrow has to be affordable. That's the common
Yeah.
theme running all through these options.
And how do we, oh, sorry, where do we get access to growth finance from? Where do we go?
Gosh, people think increasingly that online is best. Um, Online is a very useful partner to anyone looking for a solution for finance, but it's not the solution because what you get online is effectively you're talking to effectively a machine like a computer. You're not talking to the people, so you can actually have a nuanced discussion because not every deal is straightforward, vanilla, simple. It's not. There's always a story behind them. So what I do and what my colleagues in the industry do, and there are thousands of brokers, there's 2,500 plus in our association registered, and probably a lot more.
Mm.
What we do is we translate what you want in plain English to what the lender expects in lender English. I'm saying that because the language of lenders is very different to the language of the customer borrowing the money.
Yeah.
We translate that to actually make sure that both sides understand what we do. That's our role. That's what we do.
Sure.
Okay. Now, asset-based lending is a combination of all the foregoing. So this tends to be for medium-sized and larger businesses. So again, this may not apply to the people here today, but usually businesses that are in growth mode, often turning over at least £2 to £3 million or more a year and profitable, they look to maybe do a blend of activities where they're looking to buy another company in a similar space. So
Mm.
what the base of asset-based lending is, it can be a mix of plant and machinery finance, commercial mortgage finance. It can be invoice finance. It can be also just straight cash flow lending, working capital lending. So it can be a combination of all of those things. But again, everything is based on the historic performance and the projections of the business going forward. In other words, what they're going to do. And that's for a more sophisticated borrower. It's often caveated by a series of what they call conditions precedent and conditions subsequent. So basically, the conditions precedent are what you have to do to get the money. And when you've actually got the facility, the conditions subsequent are the terms that you have to then fulfill for the lender. Sometimes they want regular management information every month. So I can give you an example. I had a client that was a lettings agent and they were making acquisitions. So they bought 3 or 4 lettings agencies. I got the funding from a specialist lender that did the ABL, and they had a whole list of conditions after they got the money in terms of what they kept in the business in cash, outside the reserves that they have to keep as a lettings agent because they keep those in a bonded account. So they had to fulfill their profit targets, their debt service cut targets. They had some other conditions they had to fulfill, and they had to do that every single month. So ABLs are for more sophisticated businesses, probably not for the
So what's the
smaller
difference between
day to
A
day.
and so 1 and 7, asset financing and asset-based lending?
Right. Asset financing is specifically products. So basically machinery, soft assets, cars, that's it. So single asset. Okay. Asset-based lending is the whole cake. So that is cash flow, the plants and machinery, the invoices, the growth finance, and other supporting funding. So it's basically a package. Okay, so you're buying the whole lot as a blended facility. So there are sub facilities within an overall amount that's lent. Okay, and usually that's covered by overarching security. So for a limited company, it'll be covered by debenture and possibly guarantees from the directors. Okay.
Okay.
Trade and export finance. Now, a lot of that I do. I actually do that with a lot of overseas clients. So essentially, what that is exactly what it says on the tin. If you've got some products that you make in the UK and you want to export them abroad, you then have what's called either a supplier credit or a buyer credit. Supplier credit is that the people selling the goods get funding for the supply of those goods, supported by a bill of lading, wherever it goes around the world, provided it's not a sanctioned state or it's a product that is actually not allowed by lenders. They don't like, for example, you won't believe this, they don't like gold, diamonds, and petroleum because they can be, how can I put it, impacted or contaminated or not quite what they are on the tin. Okay, but if it's, basic stuff like foodstuffs, metals, base metals that you use for manufacturing, base minerals that you use for manufacturing, machinery, products, those sorts of things, you can do that. And I do that with clients. And I get inquiries not just in the UK, but from overseas as well. So that's what it does on the tin. A lot of lenders, the mainstream banks do this for, let's say, more regular UK-based customers, but they tend to be more established, mature business.
Okay. Number 9. Let's go to number 9.
Bridging loans. Yeah. Now, again, a residential mortgage broker may do a bridging loan for, let's say, that are personally owned buy to let. But a bridging loan is exactly what it says on the tin. It's normally on a commercial property. Sometimes it's on a personal one where you need to raise money quickly. Okay. Bridging loans are usually only for a period of between 6 and 24 months. And there has to be an exit. So, for example, people use bridging loans, for example, on a property where they are actually buying a business, or they're looking to expand an existing business and they need a short-term fix of cash. But the bridging lenders will take security on the property concerned, whether it's residential or commercial. They'll only lend up to about 75% of the value. So it may already have a loan on it. So you could have what's called a second charge bridging loan. So it reaches that value. So there's got to be some fat in it at the end of the day. And the lender will always ask, what's your exit? How are you going to repay me the money? And then you have to either say, I'm going to sell the property and then redeem the loans, or I'm going to refinance it with another commercial loan when I bought my business, or some other exit solution. Okay? There's always got to be a solution. The bridging loans allow you to borrow the money you need on day one. Some lenders will charge the interest and roll it up. They won't take any money for the period. But you say you might borrow £100,000 on day one, and after 18 months, you've got to pay back 125,000. But you don't pay any interest until the end. So you borrow 100 day one, 18 months later, you pay back 125. And there are fees at the beginning and there's fees at the end. And they tend to be quite expensive. They work out about between 1 and 1.25% per month. Not as expensive as some of the working capital financing, which is a lot higher. It's often done at about 3% a month to 4% a month. So that's quite expensive. So the working capital financing, you've got to really make sure you have big profits, otherwise it's an expensive form of borrowing. Okay.
Makes sense. And number 10, development finance.
Yeah. So again, probably not for this audience, and I will touch on some other things that are not on the key financing options here, but that's really for developers who have basically bought a plot of land with planning permission, and they build it out over a period of time, say up to about 2 years. And they raise the money to buy the land, and then they raise the money to buy the actual, to actually develop it out. So typically, lenders will lend up to 50% to buy the land of the value of the land purchase, and then 100% of the building costs. And there's always got to be an exit, so they have something called gross development value. So let's say you buy the land for £1 million, it costs £2 million to build out, it's £3 million. I'm using big figures, it's simpler. And you base it, the gross development value is £4 million. So you're making £1 million when you finish the job. But you've got to make sure you can service the interest and make a profit. Okay.
Makes sense. Makes sense. Now I've got a couple of cheeky questions,
Good.
and these could be some really rudimentary questions. But hey, look, it's good to always ask them.
Good.
So, what if I was to, I don't know, um, we'll get a commercial loan,
Yeah.
and promise is going to be spent on buying some property or whatever, but they go
Yeah.
on spend it on funding my home extension or go and fund fund my Porsche or something.
Yeah.
How what's going to stop me from doing that? Once the money's in my bank account, I can go and spend it how I want,
Well,
right?
that's a very good question. If you are representing to the lender that you're using it for a specific purpose, the lender will ask you to prove that purpose.
Mm.
Thank you. I like the comment, Jasmine.
Mm.
Yes, you're right. It is a form of fraud. So,
But what if I think, hey, look, I just need to borrow, I don't know, £120,000. Yes, I'm going to buy a nice car with it, and I will pay the lenders back, but through different means, through some of my rentals or whatever. What's stopping me from doing that? I mean, how do lenders? I guess the crux of the question is: do lenders monitor where the money is going, or does
yeah,
somebody monitor where the money is going?
yeah, the lenders do. Back in the day, maybe 20, 30 years ago, you might be able to get away with that. But such is the development of technology now. They will check if you're borrowing a sizable amount of money, they will maybe insist on having access to reading your bank accounts. I have lenders now who provide this working capital stuff, for example, and for newer businesses, where they want the ability to check the repayments every month. So if they have read-only access to your bank statements, they'll see where the money's gone. And some lenders will insist on that. Okay. So it isn't quite as straightforward. Don't get me wrong. There are still people out there chancing their arm. It does happen. But you've got to be able to demonstrate the use of those funds is for the purpose that you've asked for it.
Ah,
And that's part of the due diligence that the lenders will go through with the broker's assistance. Okay. Don't forget, a broker also has to be a representative of truth. I've got a legal duty of care. There is something called consumer duty, and that
mm,
now enshrines all businesses, not just sole traders and partnerships and individuals, limited companies too. So I have to make sure that what I actually propose to a lender is what it says on the tin. It's very simple. That's a legal obligation.
sure. Fine, makes sense. Um, Now, my understanding is just from hearing out the audience we've got today that they may be in the initial stages of creating a business, at which point grants become so important. And so do business plans. Let's tackle grant. By the way, to the listeners here today, feel free to ask any questions in the chat box and we'll
Yeah,
get them answered.
Hamid's just
We've
asked
got
a
a question
question.
coming in from Hamid. Is that
Yeah,
for all types of financing?
the answer is yes to that question, but it's about honesty. And Isla has just asked about investors as well. Yes, you can have investors partner you. So, for example, if you've got a new business and you need support, you can get investors in to put money in, either as directors' loans or investors' loans or shareholders' loans or whatever it is. But
Mm,
they need to be accountable for that money. If they're putting their money in and they don't want a return out of it, they're putting in as risk capital. That's fine. You know, you've got to disclose all your sources of income, because any plan that you write, you've got to make sure that it's affordable, especially for newer start businesses. There's something I
mm,
will mention, by the way, because there's a couple of people who are thinking about starting up a business. Um, One very good way of doing that, which doesn't require a broker, which you can do yourself, if you are starting up a business, within the first 18 months, you can apply through the government website. So, gov.uk, look for startup loan, and you can, provided your credit record and your credit history is good, you can borrow up to £25,000 personally at 8% to basically start your business. I think they go up to 5 years, but that is a government loan. It's not a grant, it's a government loan, but it's a startup loan for any new business. Okay. And that might be, for most of the majority of people here, the most valuable takeaway you get. And that will cost you nothing from me, because effectively it's a government service. But they will look at your credit history and they will look at your credit record. So, what I said earlier, don't miss a payment ever, because it really hurts you. and much more so than it did maybe even 5 years ago.
Okay. So government, so startup loans is important. It is at 8%, and you can
Yeah,
pay
yeah.
over
They
zero
can
to
pay it
five
over
years.
up to five. I believe it's up to 5 years. But what
Makes
happens
sense.
is you go through the government portal, you put your details in, you explain what your business is. It presumes a level of responsibility on the borrower's part, so you've got to be
Mm,
honest about it. You've got to make. They may request you to provide a 12-month cash flow or small business plan, but you need to know what realistically you're going to be able to deliver in your new
mm,
business. Okay, so they are taking a risk on you, A, being honest, and B, making sure that you've actually costed your idea and you can actually monetize idea over
mm.
that period of time that you want to borrow the money. Okay.
Makes sense. Makes sense. Next question is around right, uh, grant funding.
Yeah.
Also a good way of financing the kind of initial stages of the business. Where do people
Right.
start when it comes to finding grants, really?
Right. There are a number of regional lenders that will also have grant facilities.
Mm,
Okay. So it depends which part of the country. They're not quite so prevalent in London, sadly. But if you live further north, I do know that several places in the Midlands and the north of England, their local authorities or local lenders specifically will provide you with funding options.
mm,
So there is one in the Midlands, which is a Coventry and Warwickshire um, lending group, which effectively does businesses in Warwickshire and in the Coventry area specifically. So they lend specifically to local businesses. They're just like a normal lender, but they provide the support at decent rates because it's partly government funded, and they treat it. They'll do it as a loan. So if you're in that area, you can get that. There are other similar schemes operating up and down regionally outside London. So do try and look for those in your local community, because if you have a community-based lender, you're more likely to get the support because it provides jobs, services, and products that benefit the local economy.
If I may,
Please, Jasmine.
sure.
sorry. If you are if you're local to Lewisham, then you can come into any of our hub libraries, which are Catford, Deptford, and Downham, and use your library card to log on to Grant Finder, which will help you find grants. You do unfortunately have to do it in person. But I see Jill, if you're in Acton, that means you have an Ealing library card, which means you could
Yeah,
use
yeah,
the Lewisham libraries, because you're a member of the consortium. And also at the British Library,
yeah,
they're about to have access back to Grant Finder, so you could also go there. And that's got lots of
yeah. That's a great point.
of grants as well. Yeah, Grant Finder's good.
Awesome.
Yeah,
Awesome.
and just to add to that, I do know I've worked in the past with some specialists that actually do charity financing as well. So if you're establishing a not-for-profit like a community interest company or a B Corp or some other socially recognised organisation, there are specialist lenders that I know that you can work with who will provide you with funding that you need for your organisation. Okay, so that's something else to bear in mind. There are different routes to market, and the not-for-profit space has a limited cohort of bigger lenders. Okay,
Mm,
but they do focus on the social lending aspect. Okay, and they're a lot more flexible than the traditional commercial lending institutions. I hope that's helpful as well.
makes sense. Makes sense. Great. That's fantastic. Now, investor financing. What's the first
Yeah.
steps around there? If you want an investor to finance your business, where should you go?
Oh my God! Right, that's a good question. Investor financing. Well, let me tell you, investors invest. There's a reason. There's a clue in the word invest.
Mm,
If they put money in, they could put money in one of three or four ways. They could put it in a straight equity, which means they're taking a risk on you and your plan and your idea and your concept, and they will make sure that they will hold you to account for that. Some will put it in the form of what's called a convertible loan or convertible redeemable loan. So, in other words, I'll lend you the money, and if I choose to, I'll convert it to equity, or I will effectively be able to control your business if you don't pay me. So some investors are quite cute. They offer you a convertible loan at a fixed interest rate, or a fixed coupon, as they call it, and you have to make the money. It holds you to account for your business plan and your concept, to make sure that you are accountable for that. And an investor will tend to be active or semi-active rather than passive. If you have a passive investor, they don't care about the money; they're just putting it in for trust you.
Yeah.
But most will actually want to have their fingers, on the tiller some of the time, or sometimes more than that.
Yeah. Okay. So are they going to be involved, or are they not going to be involved? But where do I find investors? Is it a case of asking some friends and family if they want to invest, or is it like a certain website? Or from your experience, how do you go about finding investors?
Oh, that's a good question. It's usually friends, friends and family and acquaintances. You need to have a big network of people that you can ask to find out who's there. There are certain websites, you need to do a little bit of research, but there are some angel investment sites. There's a few. So go and look for them. They will expect you to have a business plan and a short pitch deck, which is a summary of your investment plan and your big business plan, which should be fully costed. You can then go and apply, and you can actually do your pitches with some of these people, and some of them might choose to invest in you, but it has to be well researched. So the key to actually raising the money is know your market, do your research, make sure that your numbers are robust and realistic, and if you can, maybe ask an accountant or someone that's qualified as an accountant, as a friend, to help you out, make sure that the numbers work. Prepare a business plan, and then prepare a short presentation pitch, and then a very simple pitch summary, which is like 1 page. You've got to be well prepared, and that takes time and effort. Okay.
Yeah, that's so important as well. Kind of the kind of thing you see on Dragon's Den. So when it comes to being well prepared, what would your top 3 tips be to the listeners here today on being well prepared if they were to go and borrow money? Where should they start?
Very, very simple. If you're an existing business, make sure you know what's in the bank. Your accounts are up to date, and I mean your online accounts now, because most businesses have to file VAT over £90,000 every 3 months as a minimum. Your accounting package, your software, whether you use Xero or QuickBooks or or Sage or whoever you use, they have got to be up to date. There's no excuse for it now. And the government collects the VAT now automatically through an automated package. So if you don't do it, you need a bookkeeper or an accountant who will do it for you. But it's on you to be able to demonstrate that. So if you're a young business, you need to put all that infrastructure in place. So there's a lot of sunk cost up front for you to actually build your business, and you've got to be sure that it works. So, and I go back to you need 3 to 6 months survival money in your business at all times. Even before you start it, you need to have that money. Otherwise, you're going to be in trouble to pay the day-to-day. And someone put a very good comment on the chat just now about credit scores. If you go for a startup loan, Isla, it helps to have a regular income and a steady job, because it basically shows your credit score will be good. You do need that. So if you're working full-time, keep the day job. It just means you're going to be doing a lot of night work. So be prepared for the physical and mental stress of doing it, okay? But you'll know when that becomes a full-time job and you can actually move from your current paid 9 to 5, okay? But don't give up the day job until you know that you can do the new job, right? So that is a big stress on you personally, right? I can't say it any other way. I've been there myself. I've had to when I set my business up, I had to spend 6 months finding clients before I could even charge for my services, which I was very fortunate to do. So, and that was doing consultancy work, because I couldn't work in financial services under my previous contract that I had back in 2007, before the financial crisis. So for me, I had no choice but to set up and pivot. So in a way, anyone starting up a business is pivoting from the day job. So make sure that you've got that covered, but make sure you pay your bills. So it's tough. It's a tough gig. Tough gig.
It can be worth it all towards the end.
Oh, absolutely.
Exactly. So we're reaching the end of this webinar, and one thing that's so important to all of us, and anyone in business or in life generally, is feedback. And in order for us to continue bringing these webinars that don't cost you any money, we'd love to get your feedback, because the more feedback we get, the more chances are we can get some more webinars coming your way. But also, you've had a chance to speak to Mike and the rest of us on answering these kind of questions. If you want to have a one-to-one conversation for 20, 30 minutes, you've got the option to select that in the feedback form. So I'm going to put in a link into the chat box. Please feel free to fill it out right now. It will take about no more than 60 seconds to do so. Simple questions, fill them out, and that will help us. But after that, I've got some other things I want to share with you as well. So if you please take a look at the chat box, which is coming in now. I'll pause for 30 seconds, give you a chance to fill it out, and then I'll share some kind of contact details with myself and Mike, should you wish to connect with us on LinkedIn, etc., to stay in touch. So once you filled out the feedback form, please say you've done so in the chat box by saying the word done or completed or something. Then I'll move on to a couple of things as we wrap up. Appreciate your time over here. Hopefully this session has been useful to you, but I'll pause it for 30 seconds, or a minute rather, for you to complete the feedback forms. Much appreciated. Thank you, Jill. Thank you, Isla. Sorry for not getting it correct over there. Silent S. Thought so.
Girls work from home, you have cat interference.
Mm. Cool. And if you'd like to get a copy of the slides as well, please feel free to let us know as well. But for that, please fill out the feedback form and we'll get the slides over to you for your usage as well. But you can use this QR code to connect with Mike on LinkedIn. So if you're not using your phone to link into this, scan the QR code. You've got his email address as well. Make a note of it. Contact him in the future. Mine's going to just follow soon after this. I'll keep it on the screen for a second or two. And here's my one.
I have to jet off to another meeting. It's Jasmine, by the way. Thank you so much, guys.
Cool. Well done. Great. Well, thanks for hosting it.
Thank you for being the leaders. Well, thanks very much, everybody. Have a great day. Bye.
Yeah. So with that, I guess closing words. Words can inspire. Thoughts can provoke, but only action brings success. So take a look at what you've learned today. See what are your next steps. What can you do going forwards? Take this from where you are to the next step. It could be having a conversation. It could be having a look at the LinkedIn websites. It could be going and going to your local authorities and seeing what grant funding is possible for you. Or even looking at the gov.website to see if startup loans is something you're going to take a look at. but do take away a solid action point for you to move forward in your work. That's it from us. 18th of August is another date for the next webinar, and that is going to be one where we're going to be going through the top 5 free AI tools every business needs. The top 3 free AI tools every business needs. Hopefully that should help you automate some things in your work to get you to the next level as well. So look out for that Eventbrite link that's probably going to be shared by Jasmine later on, or go into the British Library website. 16th of August, I think, same time as a Friday as well, 10:30. We've got another guest who's going to be showing top 5 AI tools, and there are some really useful ones as well. Have a wonderful week. Look after yourselves. Take care. Bye bye.